Hi, welcome to Akshaya Money Management. This is Narasimha Kumar. Let us see the May series. The starting of the May series was a bloodbath. Last month, we have seen the April series. Nifty is able to consolidate somewhere and able to sustain above 17,000. But this May series, we have seen the Nifty is crossed below 16,000 levels. So this month, let us see what levels we can see the market still goes down, and what are the worrying factor. Should we exit from the market or should we continue holding our SIP and STPs? Let us continue. As we last time we discussed it, markets are falling because of the crude prices are going up. Because of the crude prices are going up, because we're seeing a lot of inflation are increasing. The emerging markets, which we depend upon the crude prices, are high. So definitely inflation is hitting us a long time. We're seeing the war is still continuing from the February 24th onwards. War is still going on. If you see all these things impacting the FIS, the major problem for us to market to go down is FIS. FIS are removing like left and right. They are removing it. If you see every month basis, they are selling around 40,000 crores, as if they kept a target of 40,000 crores. So if you see from October 21 onwards, every month they are removing the money. If you see in the last COVID 2000, they sold 9.6 billion. Whereas if you see as of today, they sold $21.7 billion, which almost a double than what the COVID time they sold it. In fact, this level is not there in 2008 also. 2008, if you see, only $16 billion they have sold it. Now they crossed $21.7 billion. So yes, why they are removing the money? The reason is valuation. If you see, we already discussed whenever the PE ratio is above 25, there's a time where it is market is very expensive. And we also discussed about the PB ratio. Whenever PB ratio increases by 3.5 points, there is a time it is considered as a overbought zone. So from that overbought zone, the obviously market should correct. There's a what right now we are seeing it. So either it may be large cap or it may be mid cap. Everything is a overbought zone. So we should see that 3.2 levels below the PB ratio. Then we'll see that it's a reasonable rate. I think right now after this correction, we are seeing that somewhere around 4. I'll tell you what levels we are right now. So from where we are getting the market support. So the major market support, we are getting it from the DAS. As I already told you, so when last time 51,000 crores in 2008, they had sold it. At that time, market is corrected by 60%. Because at that time, our mutual fund contribution only 14,000 crores. Whereas right now, almost 3 times of that one is been sold by FIs. But right now, market is falling hardly 11%, not 60%. That shows a maturity in our investors. So 1.4 lakh crores is being invested by the mutual fund and domestic market. So that shows that a lot of confidence our domestic people, it may be fund managers or it may be big giants, they're getting confidence in Indian markets. From where they're getting confidence? Let us see that points also. If you see 2000 or 2004 below, what was the income tax collections and what is right now collections? If you see, this is an all-time high, I can say. So for any country, income tax is a revenue for the country. So like, for example, in household also, how we are getting income. So as long as income is more, I don't think so we should be worrying factor. Not only this one, you can see that, for example, corporate taxes are increased, indirect taxes are increased. So all the revenue for the India is very strong. And second thing is net sales. If you see before COVID, okay, COVID was a damage. Before COVID also, if you see our net sales of the top 100 companies were not so great. For example, if you see in June 2019 onwards, our net sales of the top 100 companies are in negative. No doubt, we have seen that it was gone minus 30%. But right now, if you see quarter on quarter basis, there is increase of 26%. That is a very good growth what we are seeing in the top line of our country. And also profits. Obviously, when the sales increases, profits also increase. If you see why we are not made any great returns, your portfolio is not given any great returns in maybe 2008, 18 and 2019 because their PAT is negative. Obviously, when the companies does not make profit, their stocks will not do well. When their stocks does not do well, their profits, the stock market also will not do well. Whereas today the situation is not like that. Even though inflation is increasing, even though we know a lot of problems are there, our company or top line companies are making a good profits. That shows that this all what the fall we are seeing is only temporary phenomena. So if you see, not only that one, like a household for you and me, what is the benefit? Even though if you see compared to last 10 years, house home loan, if you see 10% is gone down to like 6.5. Yes, now they increased by 0.3, 0.4%, is right now 7.1%. But still it is much attractive compared to the last maybe 10 years or 5 years back. So these are some of the boosters where DIs are seeing the valuation. Sometime of the other, this market will going to bounce back. All these things, instead of seeing it, household, everything, you can see this GST collection. This GST collection, every month on month basis, it is increasing. You can see it in the time of COVID, it was hardly 322 billion collection. Today, if you see the highest collection is 1,675 billion is been collected in the month of April 2022. That shows that economy is not disturbed, maybe because of the inflation or because of the any supply chain. Let me show as an investor what you should do. This is the most important graph, please look into. So if you remember a lot of our videos in the month of February and to March, we've been telling in all the medias, all the friends to invest more into the stock market. The reason is at that time, PB is gone as low as 17.15. So now, right now, we are coming as low as that one. Just observe one thing. Our Nifty is not came down. Our Sensex is not came down to, if you remember the lowest Sensex we have seen 25,000. We are not came to that levels. But what it came down, PE ratio is came down. Means earnings are increasing of the companies as we discussed in the previous slides. So this is almost all near to that zone is there. Remember, as soon as you see the P ratios goes to 18, please start investing aggressive into the stock market. And let me tell you where we are, because at that time, whoever listened to our videos and invested, they made very good returns in the next 2 years. So in our Akshaya Money Management, we follow this table very, very closely. If we see 25 and above P ratios, we do profit booking of our customers. That's what we are doing in the 2022 January, February. We brought down all our customer equities from 70% or maybe 80%. We brought down to maybe 25% to 30% equity, because there's a time where you should do the profit booking. And now, if you see it, it is coming to almost like a below 20. Below 20 is a time where you should start investing. Right now, why I'm saying this one is, this has been proven table. Whenever you invest in the range of 15 to 20, you will definitely want to make next 3 years a killing returns of 51%. That's what we already seen in March, February. Whoever invested, they made like 60% returns or 50% returns. And now is a one more opportunity you are getting it. So let me see where we are right now. We are right now 19.87 P ratio. PB came down to 4.5 to 4.05, which is very attractive. If it goes below 3.5 PB ratio, is a very good time to start investing aggressive into the stock market. Irrespective of the war, irrespective of all these things, they're all you and I cannot control it. Only what we know it is, when the valuations are very attractive, start investing it. So this is what we came below 20 Nifty. That's a good. You just wait, maybe it may come to 18 or 18 PE or 17 PE. There's a time you start aggressive investing into the stock. Yes, ups and downs will be there in the stock market. If you see in the last 10 years, the lots of ups and downs are there. Yes, one thing you should keep your expectation. You do please do not expect like last year you made 34%. This year also I'll make 30%. No. So if you see last 10 years rolling returns, Nifty is given hardly 11.4%, and you can see the 11.4%. Small cap also is given like 11.77%, and mid cap is overperformed more than small and Nifty. So that should be your expectation. If Nifty is given 12%, can I able to make to my clients a 15%, 16%? That is our Akshaya Money Management also. We are keeping the expectation, and we're telling customers also this year we're not going to expect any returns, and next 3 years we can make very good returns if you're investing in this levels. Yes, summing up, yes, there is a lot of negativity from the USA market, a lot of volatility. Right now it is there. There is a what we are seeing in the emerging markets. Repo rates increasing, it is happening. Last time they increased the repo rate, and they're expected to increase in this year. There'll be a lot of volatility. So this year you can consider as a lot of volatility. You may not see great returns, but please think for next 3 to 5 years. So whoever invests in these levels, they'll make very good returns in next 3 years. So it's a golden opportunity. Do not miss it out. So hope you enjoyed and you have got a lot of good information about this video. Thank you for watching Akshaya Money Management.